But I want to take what you just said and apply it to a theme we've been talking about on the show a lot, which is the startup M&A dearth, or just the lack of exits that we've been seeing. And you mentioned IPOs being delayed, and that's a known phenomena. But there's been a lot of commentary in the venture world, startup world, about kind of who's to blame for the lack of M&A, essentially. And I know a lot of people have perspectives on Lena Khan and so forth, but it seems also that venture is partially to blame, because if they are putting too much money into these companies too early, closing off doors, well, there go the singles and doubles, to use the classic baseball analogy, that some people in the venture world really seem to care about or covet. So, as part of the lack of exits, just venture capitalists overcapitalizing early stage companies.
It can be, and it has two impacts here. Like, first, let's talk IPO markets. Second, let's talk M&A markets.
Sure.
Everyone likes to say, are M&A markets open or are they closed? Like, I kind of take a different perspective. They're always open. The market clearing price just varies. And like, you're either willing to take the market clearing price or you're not. One challenge is all of these companies are, again, of all the unicorns, there's maybe a 1,300, read some article, 1,300 private unicorns.
Yeah.
Yeah, I'd probably wager 5% or less of those unicorns, will ever actually exit at a price greater than what they raised in a ZERP round, right? Like, it's a really small number that will. What's one reason people think the IPO markets are closed? If you raise a round at $5-6 billion, but you're public, if you were public today, you were $2 billion, you're like, I don't want to do that. Maybe your board doesn't want you to do it, right? Your board doesn't want to take that mark. Your investors don't want to take that hit. Hey, just keep growing. Eventually, you'll be worth more. You'll grow into it. But if your last round was $1 billion, maybe you go public at $2 billion. You could double your last round price. There's no employee hit. There's no morale issues. You just doubled your valuation in an IPO. But if you raised at $6 billion, you don't want to go public at $2 billion. That's a down round. Your investors might not want that.
It looks bad for everybody involved.
Bad. There's momentum issues. And so, I think one of the reasons you don't see a lot of these IPOs is that there's just a market clearing price people don't want to accept, because you can raise at 30 times revenue in the private markets and 5 times in the public markets. And there's just a big valuation gap there. And that'll change, right?